Okay, it's good to see you again at Chart This. After a little hiatus, we are once again here. My name is Jeremy Safran. The gold bulls are once again in control. A strong breakout after weeks of consolidation has transformed the story and sent prices soaring to levels not seen since the summer highs. The next question is this a genuine move? Gary Wagner, editor of the goldforecast.com and widely regarded as one of the top technical analysts in the industry, is here to help us make sense of the data and choose our next steps. Enjoy your summer, Gary. Is everything okay? Come back soon. We were missing you. Oh, what a wonderful time to be back. It has been wonderful, and it is wonderful to be back. I believe we have a lot to tell our audience, and I also believe that we're in for some exciting moments ahead, which we have already experienced. In a way, it's making things worse. The direction I believe gold will move in is incredibly exciting to me. Then, all right, let's dive into it. You seemed more careful the previous time you came here. Stated that the technical decline of gold below its 50-day moving average was cause for concern, but that you have already signaled a significant positive event with the breakout of gold above the compression triangle. So, please bring up the charts and explain the changes. When did you go from being cautious to being bullish? Sure thing. A Japanese candlestick chart is displayed here every day. Trend analysis, Elliott wave theory, and pattern detection, like the current symmetrical triangle, are the main tools in my toolbox, though I do draw from a variety of sources. We have witnessed a wild bull market. You can see that we're sitting at 2030 in March of 2024. Not too much to take it to 3200. If we move it back a little bit, 3,400 maybe. Here we are at 1,000 viewers, and it continues to rise until it reaches 3,500 watchers, which is the highest intraday total ever. I am perusing a chart for futures. As a result, the figures will differ slightly from spot to spot. After that, we were aware, or at least our model indicated, that a correction was imminent. And I had anticipated seeing that. On the other hand, during a correction, the market usually experiences an A, B, and C. After that, it returns to the motive phase, which consists of 5 waves of bullish movement, 1, 3, and 5. Interspersed with them are waves 2 and 4 of correction. What really transpired, though, was that we began to suspect that this was not playing out as a straightforward ABC pattern, but rather something a bit more intricate after we had already sketched in the compression triangle and observed the market rise to this peak. A symmetrical triangle is the simplest way to describe this. If you follow the symmetrical triangle pattern, you should expect to see a string of rallies, followed by a string of shallow corrections, and then another string of shallow rallies, and so on until you usually reach the E-wave. The thrust occurs when you follow the E-wave in accordance with the model's predictions, which did not work out this time. You get the hardcore breakout when prices break above the resistance line. It's the wrong one, but it's only when prices break above. That was completely invisible to us. Thus, we observed the return of gold to the canal. Allow me to exaggerate this a bit. Getting back into the channel means trading all the way to the bottom. Now that we know it didn't happen here, a thrust or breakout, we know this is when it will happen, if it happens at all. At approximately 3,410, this is when our subscription count began to rise. We were rather confident that it would not break to the downside. After all, Jeremy, a symmetrical triangle isn't required to break to either the upside or the downside. Both are possible. It usually moves in the direction of the trend, which is higher in most cases. Indeed, it is precisely what we observed. Right now, we are standing on the edge of the obstacle. We need our viewers to be able to see it. You can see that we've only scratched the surface. I'll go into greater detail later. Finally, the breakthrough I had been anticipating had arrived. Furthermore, I anticipate a robust breakout to the upside after a firm close above, say 3,473, driving the price of gold far higher, despite the fact that it has already risen from $33.58 to $34.78. Therefore, it has gone quite a ways. If we can successfully close above this resistance line, which appears to be very likely, we believe there is a lot more upside potential at the moment. Wow, Garen, that's an interesting situation. Really, the whole year has passed. You observed that around 3:40:10 on Monday, your clients initiated a long position in the futures market. I suppose that on the spot side, gold is continuing to push the day's highs, trading strongly in the 3,415 to 3,420 range. As a technical trader, wouldn't you like to see price movement like this to prove that Monday's breakout is holding and turning old resistance into new support? Definitely, definitely. Since it failed to emerge in the expected location during this E-wave and retreated to the channel, we thought that the next rally would be the time for this pattern to pay off. Hence, we positioned ourselves early in this rally. But if it hasn't happened yet, the confirmation will be announced when the market closes today, which is in New York in a short while. Oh, it's actually going to be our next stop. That's incorrect. It's Friday. Going into the weekend, I am firmly certain that we will witness follow-through next week and significantly higher prices if the closure is effectively above this resistance line or at it. Yes. We observed that the target with the ID 3473 was okay. If this advance begins to retrace a bit, where will the new support line be? Support, you know, is a comical figure. The current firm support level is 33.57. It all starts with this low point. From a trend line perspective, resistance has been moving downward. Once we get that clean break, which we have, but it's just above it, this will become the new support line. So resistance has been falling. It's not very high up there. That should transpire in the coming trading days, in my opinion. Yeah, holy cow. Are we going to move up to 35 once more? On this train, nothing but a wild trip. Alright then, let's discuss silver, the less stable relative of gold. According to what you indicated in our last conversation, silver has a tendency to outperform gold when it is running. While I'm writing this, spot silver prices have risen by about 1.3%, which is roughly twice the gain in gold. Plus, the current price has broken through $39 per ounce with persuasive force. Could silver be a sign that gold is strong and maybe even taking the lead in this upward movement? Obviously, it has been falling behind gold. Without a doubt, this is a daily. Also, I'll bring it back to you. It was a monthly. The results for this month range from 37.48 to 39.72. Really bold. 4.42%. Pardon me, but I need your help with this. Silver ended yesterday at $2.42, which is 6.5% higher than the previous month. The red line was drawn in yesterday because of that. In light of the fact that these prices have not been seen since February 2013, we have successfully eliminated the major issue we encountered with silver at 3,300. Technical resistance was particularly strong at approximately 35, but the price easily passed through it. To better understand the situation, we will return to a daily chart. Our next predicted level of resistance is 40, although we may encounter it at any point. I don't see any significant resistance in the near future. Our current studies are pointing to a monthly, rather than a daily, price target of $42. Now, as I mentioned before, we need to compress this chart all the way back to 2014 before we can see when it last locked on. You indicated in your last interview, and I believe you brought it up again here, that $42 is the next significant level for silver, and I was going to question you about it. Looking at that graph, has that goal now come into clear view for the third quarter, given this newfound momentum? At the moment, it is undeniably the target of everyone's attention. Does it have the potential to rise further? Yes. In response to gold, it is acting somewhat more delicately than before. You can see my upside target at 42.30. If it breaks strongly through 44, the next upside target is above that level. Many have been waiting for this, and the US dollar is obviously a major player in this story. Now that it's playing catch-up, I wouldn't be surprised if silver moved even higher than that. You mentioned the 50-day simple moving average as a place of resistance for the dollar index when we last spoke. Gary, what does the current state of the DXY chart look like? Was the collapse at that critical level the signal that precious metals needed to begin their most recent rally? For short-term market expectations, we would look at this simple 50-day moving average. We will maintain a strong positive stance if it remains above the 50-day moving average in the near future. The 100-day term is intermediate, while the 200-day period is long-term. I have so red highlighted the 200-day period. The 50-day mark is colored green. During the 50-day period, it melted. Whenever it crossed the 50, you could tell the movements were very dramatic, in addition to the 200. The significance of this lies in the fact that it indicates, from a technical perspective and over the long run, that the dollar is highly bearish and has additional potential to fall. As for goals, if it keeps falling, 95. Now we can rely on it using data from a Fibonacci retracement set. That starts in May at 89 and goes all the way up to the recent record high of 114. Next, we draw in the crucial numbers. The retracement level is 78%. This, of course, is where we'll begin. This is the 38th, as is clearly visible. We are talking about 50 of these. The truth is that we have already gone beyond the 61 and are likely quite near to this. As for the corrections, 61 is a deep but reasonable correction. A 78 is tolerable. However, it is not very common. In addition, if the price action drops below 78, it will signal a complete shift from a positive market correction to a bearish one. That would be the signal if we were to break below 78. You can see that it drops, tests this area, and then rises again, and observe that it encounters resistance at the 50% mark when you examine this chart. After that, it descends again, slices through it, and the subsequent attempts are revealed. Sure, let's expand this. Every effort that came in to recover from that point onwards was fruitless. This leads me to believe that the dollar is more likely to fall in value than rise in value. To reiterate, the next objective is to reach a dollar index level of approximately 95. Quite intriguing. Watching it is fascinating for sure. I ought to take the opposite tack. It seems like there's a lot of competition in this bearish dollar trade. Where are we now? Is there any chance of a sudden short covering rally? Do you think that poses the greatest risk to limiting the decline of gold? Well, I guess anything can happen. Yeah. However, there have been some very influential traders throughout history, including those that I used to follow when I was younger. Even George Soros was among them. Though his political views are divisive, his trading skills are second to none. If he thought the value of the Japanese yen was going to fall, he would actively seek out opportunities for it to do so. Between 6 months and 2 years. Put another way, he would keep an eye out for these major shifts. Once currency prices begin to exhibit clear and persistent trends, like this one, which is not a very volatile market, they often continue to do so. That is to say, the underlying conditions that led to the dollar's depreciation. The dollar has fallen far below this, and it will continue to fall as long as those variables are present in the market. For the time being, nevertheless, I think it is more than possible to witness a breach of 95 before we talk about this 90. In my opinion, it's looking good in the cards, barring any unforeseen circumstances. It's even likely that 90 and 89 will happen, and likely will end up going out in that manner. This slot at 88 does exist, as you can see in the table below. We can locate periods when it was lower if I make it longer. However, I believe that it is clear now that the break below 61.8 was not easy. There's significance in that figure. Its efforts to reclaim that and rally above it were fruitless. The current path of least resistance is downwards, so that's where it should go if it can't get back up. Yeah. For that reason, I expect the dollar to keep falling. Could this be the beginning of a long-term trend with the currencies? Sure thing. Discovering trends that usually stick around for a while is a real treat. How long they remain in effect is dependent on the underlying factors that cause the currency to rise or fall. Because the dollar and other currencies will continue to fall in value as long as the market factors that caused their decline are still present. This will happen until these factors are no longer perceived by traders or impacting the market. Keep in mind that there is a basket of 8 currencies used to trade the dollar index. Obviously, the mass is different. About half of that, I think, is the euro. There are 7 other currencies that contribute to the dollar index, but you're mostly viewing a dollar-euro chart. I think it's quite likely that the dollar will stay relatively stable, if not fall. Yes, that is intriguing. We have 3,473 points on the gold target and 42 on the silver. So before I let you go, I just have one question for you. Obviously, it's not all sunshine and rainbows. That strength is seen everywhere, you know. Palladium, silver, and platinum. Gar, you don't have to provide a chart of those, but could this be an indication that perhaps the precious metal sector is seeing a massive upswing? Does that strengthen your belief in this rally, I mean? Gold, silver, platinum, and palladium, all of which you mentioned, are, in my opinion, pegged to the dollar. On that front, a continued decline in the value of the dollar will have an effect, a powerful effect, on the price of these precious metals. One of the two reasons that the prices of precious metals like gold, silver, and palladium will rise is the general mood of the market. And the second one is the relative strength of different currencies. For example, suppose the dollar has been quite weak all year, falling from 109 at the start of the year to 97 today, a loss of more than 17%. Yes, indeed, a tremendous sum. Okay, Gary, I think we should just leave it at that. As usual, your insights are fantastic. The bulls appear to have regained control, but it seems like discipline is extremely important here, huh? Be mindful that, for instance, just because the gold market is near record highs doesn't imply that you should sell into it or get out of it. Discipline is always key, though. You need to be strategic about where you strike. You could position yourself to go long at the beginning of these rallies because of the compression triangle series of rallies and corrections. The range is there, so it was a wonderful setup. Stay bullish on gold for the time being. Regardless of when things progress, my long-term goal is to have 1 troy ounce of gold priced at $3,700 or more. As a result, I am really optimistic and think there is a lot of potential for further gains. Do not think that it is finished. Yeah, absolutely right. The day's worth of moving averages has officially taken over my brain. There are still some fantastic upward moves here, and I need a moment to process it all. As always, your analysis is superb. Many thanks for being here today, Gary. Enjoying my time here? This is a great place to be. All right. Those were the words of the goldforecast.com editor, Gary Wagner. Here at Kitco News, kitco.com, we have all the most recent charts and analysis for you. Remember to subscribe here, of course. Leave your gold price target in the comments for more expert interviews and up-to-the-minute analysis. As part of Chart This, we will be reviewing them. Hey there, I'm Jerry Saffa. Up next, we'll meet again